The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Monday edition. This is September the 16th, and I just realized I got a nephew's birthday's today. And thank you, Steve, for 2 great hours, a great education. Of course, Steve's got his master trading course coming up a week from Friday. Please check into it. You know, we're all about education here at TFNN. A couple of things here. This is very important. We had 2 news events yesterday, one about Syria, one about Summers. It's so fascinating. In the reality of a position, there are many times, it's the same as on the judicial bench, it is the same as many politicians. When confronted with different facts or certain facts, if they are objective thinkers, if they are critical thinkers, there are times where they make decisions that are not in concert with what everyone anticipates that they would normally do. So how on earth would anybody ever know really what Larry Summers would have done? How do you know if Yellen is going to be the head of the Fed? How is she going to? What is she going to do? Is she going to be as dovish as everyone talks about? You don't know. Circumstances can change. And as I say, critical thinkers, that's very different to pedagogues, to folks who are pedants, who are perhaps stuck in a certain way of looking at things. So this, to me, is just an emotional response within the context of this ongoing mega bull market, looking at monthly charts. And within this context, I'm looking at a number of charts and I'm saying, there's a rotation going on, and the rotation that's going on is quite subtle, but there are signs that once again some sectors are becoming extremely overbought, and I'm not sure I can even call them sectors, more like stocks within sectors are starting to show signs that are, while not yet bullish per se, but are signs that they are waking up. And I think that is really critical for a long time. One of the reasons when we look at the markets, very often there's an emotional response that's going on internally. That's our own emotional response. And then there's the technical side, which is the picture of what I like to call the internals, a look at the market beyond an X-ray. You know, sometimes an X-ray is for a certain thing. You have a fracture. Sometimes you have an echo. An echo does something else. Sometimes you have an MRI. Sometimes you have an EKG for the heart. MRI, sometimes when you want to look at the degree of information in the most critical way, but it might bypass what, say, an echogram could do, or some other means of identification. Well, very often, for instance, if I go to my own critical thinking and look at the weekly charts, and the weekly chart really is what I was focusing on. One of the reasons why we went short when we went short, we got the short on the S&P within a point of the all-time high. Had a fantastic run to the bottom at the lows of late August. And then what I said is to subscribers to my opening call, some of you might want to take something off if you're a swing trader in some of these positions. I want to stay in these short positions because the weekly chart was still technically very weak, certainly in the Dow. Well, it turns out that if I just followed my methodology of a buy signal in my Chapman wave methodology, the buy signal starts with a stochastic and the price in certain candle movements. That buy signal then goes to a buy mode, but it's only a buy mode in the stochastic, in the slow stochastic. You then need to get a confirmation of a buy mode in the MACD, the moving average convergence divergence with price movement, and preferably see very quickly the stochastic go over a certain percentage level. Well, it did all that. So I got to the party late. Thank goodness we didn't take any losses. We took profits, but we gave away a lot. And that to me is just, it's unforgivable. However, what I'm saying here, it's just like the Larry Summers thing. There is an emotional response and there's a practical response. And we don't know yet whether or not, well, we will never know now if Larry Summers would have been the perfect person. You can have your own guesses. You can think any way you want. But what is very important right now is looking at the technical charts. And technically what we're looking at, let me just go to what I normally do. I go to the E-minis and I just run the numbers. The E-minis right now up 13, giving back a big chunk of the gain. Earlier they're up 20. Right now the high of 1703.75 takes out the previous high. And in that particular instance, my gray letters, which were underneath the previous high, become back to black, in this case dark blue letters, and I'm not putting E/C, which I would normally put in here, because the major low back in June the 24th at 1547.25 on the December future went to a peak D, but it pulled back from the 1698 level to the 1618s, way above the low of 1547.25. 1547.25, and that means that it could be a continuation of the old move. However, this is what I like to look at. When I'm studying these charts, I look at it and I say, okay, I'm going to call that, because the stochastic is way up at 94% and the MACD is still expanding, but it isn't as good as it was before. I'm going to call it C. Let me just change this here. C/C. It means you can't forget the fact that it could fail. I mean, anything could fail, and there could be a reason for it. And the only reason would be that it plunges below 1670. That's 25 points below where we are now. And the stochastic plummets below 80%. That would be that double camel hump thing that I talk about. In this particular instance, that's a Chapman wave squash, and that takes you to a peak C. What happens very often in this particular chart formation is that you go to the C, and then the stochastic starts to lag, and the fast moving average of the MACD takes over, and it takes a little while before it gets to the D. In other words, we could now have a consolidation up at these levels for a little while. We don't have to break down. You might fill a little bit of the gap. Don't have to break down, but you could in fact see consolidation, and it turns out to be a cup and maybe a ladle pattern. But more importantly, because we've broken out the way we have in this pattern that I call, there's a much greater pattern. I'm going to put this in here like that. That is called a Chapman wave cup and ladle potential ladle pattern. We need to close decisively over 1698.50, and the bar that takes that out is the bar that has to continue. In other words, there is no time for a break in that particular pattern. Let me just expand it so that you know exactly what I'm talking about. There we are. This is the big pattern right there. Maybe I'll color it in. I'll color it in purple, pinky. Oh, wrong one. Let me just color that in. Right there. Make that a nice pink. If I can get to it. There it is, pink. Why does it keep on going to the wrong thing? Okay, I'll get it. Here we go. There it is. Pink. And pink here. And now what we're looking at is something a little different. If this powers right through on a closing basis, in other words, it closes above 1698.50, we're at 1695.25 right now, and then tomorrow or the next day, without going back into the cup by much at all, it just continues higher. It should go to at least the leg D. at that particular point, we've got to be a little bit careful, because at D, that's where it could start a deeper decline. So I'm going one step at a time. That's the E-minis. Now let's run the numbers, and I'll do it with the charts right here, and then we'll go to our callers, INDU. The Dow right now is up 158 to 15,534. 15,658 is needed to be able to go above the all-time high of the 2nd of August at peak F, and I'll have to call that. If it does it, I don't know if I'm going to be able to call that G. That to me would automatically, and I have to consider that at 97%, I've got to put in an up arrow right here, that the Dow is in a buy mode because of the fabulous movements that it's had. I talked about this the other day, and I showed my subscribers this. And this is the thing that forced me to get rid of any shorts and to push to the long side as much as I could. And that is the pattern that is was matching from the takeoff of June the 24th. This is bar 12. At bar 12, you had a spectacular move on the in the previous buy mode on the 11th of July. Then you made a doji close, and you went sideways for a little while. I suspect at this particular resistance, tomorrow and the next day, we will see a sideways move. That's what I'm thinking. And will we then break out? We're going to be watching that very closely. So this is, I had a left side, right side price time move to the high of peak F. That was the high of 15,658 in this method that I use in the Chapman wave on the 20th of September. That's at the end of the week. Have I got my calendar in front of me? The 20th is in fact Friday, options expiration. So it can do it beforehand. I don't know if it will, but that's kind of what I'm looking at. Would that be right? Yeah, that would, wait, it would be a little later. Sorry, it's there. I'm moving it up because we've already hit that level. No, it'll be a day or two later, maybe the Monday of the next week. So, following this particular pattern, let's see exactly what happens. So far, it's very positive. Now, a couple of little things here. Let's go to the the support at 15,533. Support in the Dow is under today's low of 15,381. I'd actually put it at 15,440 to 15,410 as near-term support. Most importantly, the resistance that we're getting into, the 15,557 level of the 8th of August. That's going to be the next resistance on the over the very near term. We'll talk about weekly charts in a moment. Meantime, let's go to the S&P SPX. X is, in fact, up very strongly. This is leg C. The Dow's in leg B. S&P and the E-minis are in leg C in the Chapman wave. And the previous high of 1709, wasn't it 1709? 1709.67, we're about 6 points away. Let's see, 1703. Yeah, about 6 points away from getting there. And I have to tell you something about the weekly chart. If the S&P goes above 1709.67, I can't call that leg G or B. It's actually leg C, based on the instant restart of the weekly chart. Just as we're going to the break, comp index is only up 11 at 37.33. Gold is up 8. This is going to be interesting at 13.17. I'll talk about that in a moment. Silver's up 28 cents at 22. Bonds are up at over $1, and the dollar is down 0.38. We'll be back with Lou in Nashua straight after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians. I had a couple of questions during the break and an email, so let me just write them down here in tab. And price line and end tap are the ones we'll look at a little later on. First, we're going to go, Lou, I'm sorry you dropped. Lou wanted to ask a question, and I never got to him. I was going to get to him, and Lou's back. Hi, Lou, you there?
Yes, I'm here.
Yeah, Lou, what did you want to look at?
Natural gas. Just wondering if it went too high to buy.
Okay, now this is very interesting. I was hoping you were listening on Friday because I did discuss, I'm almost sure it was Friday. Was it Thursday or was it Friday? I think it was either Thursday or Friday. I looked at natural because you had called earlier in the week, and I looked at it and I liked the fact that it was making that H pattern. I remember it was last week, I think Wednesday that we spoke. I think it was Wednesday. And I was looking at it, and there was the pattern that said if it breaks and closes under $3.51, and let me look at the NGZ contract. If it broke under and closed under $3.768, then I had to be careful because there was a pattern that says, be careful of the H pattern. Well, it went under it, the left side low, and then it closed above it. And then on Thursday. No, it must have been, Thursday. It started to act very well. There was a report, and I loved it. And as it was moving, I said, oh, that's a successful test, but it was based on my continuous contract, which didn't go under the left side low bar. I'm calling this brand new leg B to the upside. It's a little dangerous because it could be a rare G. I like what I'm seeing. And remember what I had said is there's a chance that looking at natural gas, that we could be looking at a very long-term H pattern in the monthly chart. And that monthly chart says if at any point natural gas can get to about 382, something like that, there's a chance that it would try to get above the $4.55 high of May of this year. And if it does that and closes above it, we are looking at the potential for a long-term move in natural gas. And the recent low of, I think it was, would August have been? Yeah, August the 8th. That recent low could in fact be the low. So even here, you've gone from 3.16 to 3.73. This is nothing when we're looking at a move that says if at any point in the coming 2-3 months natural gas finally gets some energy and it can break into the 4s and then break above 450, it's going up a lot. So I know that you look at the futures, and futures have contract time limits of a couple of months, but I'm going to make the suggestion. You have no position right now. Is that correct?
Right.
Okay. Now, if you'll have to think this through in the methodology that you use. If you're able to rotate or roll through different contracts, that's one thing. Or if you want to take one out that is not December, it goes to March. I'm going to make a suggestion here because I know you are quite prepared to hold a position if you feel comfortable that it has an intermediate term outlook. Is that correct?
Mm-hmm. Yes.
Okay. So I'm going to recommend start a position in your natural gas. One of the big reasons is that the week that we just had was really important to break out and break above the high of 3.719. That was the high in the continuous contract of the 5th of September. Now I'm looking at it, and the daily chart, natural gas says 3.809 is the level of the 200-period exponential moving average that it should get to, and then it should wiggle around above and below, but not too far above, not too far below for at least, I'd say, a week or even 10 sessions, and then that would take it to the end of September. Sometime in October, I want to see a really strong move. It could do it beforehand, of course, about 4.047. That's the high of the 19th of June. Wow, if that happens, that's going to be very positive. So I'm going to suggest that you take at least start a position. This position you're going to have to give a little bit of room to. At this point, I don't think you're going to need it. But my suggestion is that I'm even going to put, I don't usually do that, so I'm going to stick with my usual traditional. I'm putting a plus sign at the bottom there. And now, this is the continuous contract on the NGZ. You know what I'm going to do is, can you hold through the break? I just want to give you an idea of the parameters that I'd be looking for, and that'll make it much clearer. So can you hold on, Lou?
I'll listen online.
You listen online. Okay, I'll give you the following thing right online, and we'll be right back. The Dow's up 165, S&P's up 15.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour online with Lou. And Lou wants to, he's looking at the natural gas. I'm recommending that he gets into the natural gas futures contract. There's a pattern that I'm looking at here that says there's the possibility that if it continues, and I'm going to go to the continuous contract now because I'm getting a lot more information, that if this pattern that I'm looking at continues, this arch pattern with a very successful test above the left side low back in April in the weekly chart, back April of 2012, it's already in leg B. I like that. It isn't the kind of leg A to B that we've seen before that are huge spikes and declines. This is a very steady move. It almost looks like one move to the upside. Lou, I'm going to recommend you get into it. You start a position, and over a period of, I would say, over the next 3 to 7 trading sessions, I will probably, if you want to call again, I'll probably be giving you the ideas on whether you want to add to it. All I can say is that based on the techniques that I use, I would consider adding to it if it goes to 3.80 at any point. All right, let me go to the Z contract, to the actual Z of December. Yeah, if it goes to $4.61, $4.06, the high of the week of the 19th of July, holds above it and then pulls back, I would probably recommend adding to that position. I think natural gas has the potential, and I really must stress the potential. We don't know, but chart-wise, it has the potential to turn the monthly chart from an H pattern, a lowercase h pattern, into a really positive. Let me just move this over here. Oh, I went to copper. Of course, copper doesn't have the same thing. It's NG. It's at NG. Boy, I've been doing charts over the weekend, hundreds and hundreds. It has the potential to have a very strong move if it can break above the highs of $4.57 back in April of this year. I like it. I'm recommending it. Now the stop. Where would I put a stop? Because it's an initial position and you're looking at a much longer term, I would have to say to you, I'm going to put the stop. It's for me, futures wise, it would be a lot, but I think $3.517. This is on the December. Oops. Let me go to the December contract. You have to go apples to apples. Yes, the low of the 11th, 4 days ago, of 3.760. I'd give it a little room. I'd call 3.70. 3.60 would be the stop I'd have. I need a little room. It might need a little digestion. It had a fabulous move. This could be part of a digestive phase. I like it. And that's the way I would be trading it. Now, I got a question. I had a question about a price line. Is price line in leg C? And the question is a great one. The fact is, a peak C. The fact is yes, but it's what I call a gray. I should change the color of the letters. I just did this the other day quickly, and then I forgot to change. The letters here need to be colored in a gray. Now, what does that mean? In the Chapman wave methodology, the object of the game, object of the whole enterprise, is to be able to identify where you've made lows that can become significant, and where you can make highs which can become significant on the downside. Well, that news-related gap up, and we've seen this in a number of stocks, especially in the NASDAQ area, when price line PCLN trading at 971.49 right now, 4.5. When it went to a high of 944.98 on the 9th of August, and then closed at the low, and then started to fill the gap, and then completely fill the gap by the 15th of August. It now has a peak ABC, but that is in the context of having a gap making a flag pattern, and within that you can get a Chapman wave buy signal that takes you just under, exactly on, or just above the major high. And in this case, there are two patterns I'm looking at. One is the cup formation, the H formation within the rectangle, and the other is, I haven't drawn the rectangle, I'm going to do it now. I didn't want to obliterate my chart work there. And that says you can get a price movement that can take you to a D. It would be above 985.77, but it probably will not get to 994.98, or if it does, it's just fractionally above, and then you've got to be careful because it starts its way down. Now, the way I'm looking at it is I'm looking at price and saying, wait a minute, the weekly chart, the MACD is good, but it's turning down. Stochastic is still above 80%, but it's way at 81.72. It's way below its 96. Was that 95 or 96? 96% level back in the week of the 12th of July. But it does have a peak C in the monthly, and I'm suspecting that it could be consolidating, and you've still got a whole 2 weeks to go before you get to October. I can't tell you whether there's going to be a peak C or a leg C extension by going 1 penny above 994.98. All I said was I'd be a little bit careful here about going long, because this pattern has the potential to fail. Let me grab my 120-minute chart here. This is peak A, B, C, D. Brand new A, B, C, D. And then that spike has failed, but it's holding 9 P. Yeah. I'd be a little cautious about this. It should be participating in this rally. In a way, it is up 0.50% for price line. It's just not a big deal. I just thought that at $971, I'm not sure there's that much that you can make. So I wanted to mention that. So if it goes above 985.77, that starts leg D. If it breaks underneath, and what I'd say is, yeah, that's okay, but if it breaks under 960, 960.17 was the low of the 13th, I'd be real careful. Now, I was looking for round numbers. I haven't found the round numbers. So maybe this still has room to go on the upside, but it's not acting all that great. That's all. It's a fantastic looking stock. The monthly is still very positive, and the weekly so far, all I can do is put the rectangle in here and say, oh, I've already got the rectangle. I drew it before. That rectangle, I can make it a little bit higher. There, that rectangle there. That's the trading range between 940 and maybe 1,000. We'll see. I wouldn't be surprised psychologically if Priceline actually at 980, 972, 25 points is good. No, 28 points are good. That actually hits 1,000. And then there's all this news about, yeah, it's a stock that hit 1,000. And I must tell you, in this mega bull market that we've had, this is I don't remember markets like this before where they've allowed the prices to go so high. Look at Google, G-O-O-G. Look at Google, up at the 891 area. Peak A, but it's underneath the round number 928 high. That 928 high in a peak D in the monthly, peak F in the weekly, and what was it in the daily? I think it was a D. Yes, a D in the daily. That's going to be the challenge. Can Google, in this move, break above 928? I suspect it's going to have a tough time. This is what I'm suspecting, right? It's only up 1.93. It should be up more. And now I want to do just two more before I do anything else. That's Google. Amazon. Amazon has a round number at the high. 313.62 was the high. 313 was the round number the high of the following day. So round number high at 297 at any point in the next whatever weeks or months. If it breaks 313 and closes above that, that's going to be very positive. Right now, I just think it needs a break. And there was one other Amazon. You got Google. I always remember these after the fact. So you got Amazon. And let's look at Baidu because that is Chinese, doing very well, was doing very well. Big spike up. Yep, consolidating. Okay, I didn't want that. I wanted someone help me. Priceline, Amazon, Google. What am I missing? Apple, of course, Apple. There's Apple. Apple is just plunging after that peak D, and then that right arm failure, like a rogue wave spike of the 26 at around number 500.75 opening. It also had a 504 low on the day of the high of the recent pop-up high. On the 19th to 513.74. See all these $500, $600, $700, $800, $900 stocks. We haven't seen that in the bull market for a very long time. But I think that Apple is having this big digestive pattern. Monthly chart still says to me that at some point we might be looking at Apple down in the 353 area. So that's that. And now we can go to the other stock that I was asked about, NetApp. NetApp. Network appliances, I guess. No, network. I always forget what they do. NetApp. So NetApp. Let me see what they do. Provides network storage solutions that enable virtualization, cloud computing, storage efficiency. Okay, well, this particular stock right now is in legs. I've got this. It could be a G, but I'm really calling it a C in the weekly chart. It's a B in the monthly chart. Made a major top peak D back in 2011, I think. Yep, 11 at 61.02. Plunged down to where? Exactly on the 200-period exponential moving average. So this is a very nice counter-trend move from the previous high. The weekly chart is still very good with a stochastic at 87%. I like it. This is leg C in the daily. Most importantly, what I'm looking at is it's the stochastics. The stochastics at 93%, the MACD is expanding. I think this will go to a D. My eye says, just based on the pattern that I'm looking at, that there's probably going to be a lot of resistance in the, I'm not even sure it can go that high, but I want to draw two parallel lines to see if it's going to work. So let's just do that. There we go. There, that's exactly what I wanted to see. So here we are. Anywhere in leg D or E between 44.42 And 44.87 is going to be the big challenge. Can it pierce and break that decisively? If it does, that's very positive, and it says in the cards you could be looking at a $45 to a $46 stock. I would go step by step right now. It's leg C. And it's the MACD and stochastic are all very positive. 9-period moving average is 43.08 support to 42.78 would be the next level of support. So it is positive. I think it's going higher. Now, I had another quick question. I had a question of, was it in the den? Let me just double check. Someone put something in. Oh, RWO. Leg C. This is, what am I looking at here? I'm looking at, this is the SPDR Dow Jones Bullseye Global RE REITs ETF. Is that right? I'm not sure. ABC in the monthly with a big pullback. Did it recycle? I thought I did this. Well, I'll do it again. Just real quickly, you go A, B, C, D, E, F. I've got this as an F in the monthly. I'm going to put it as an F/C because it's still unfolding. And it's holding the 9-period moving average. My suspicion is that you really have a rectangle formation here, and that the moment, if you see this close on a monthly basis below 39.39, it's trading at 42.46 right now. RWO, SPDR Dow Jones Bullseye Global REITs. It must be REITs. Real estate ETF. Wow, that's interesting. That's what I'm looking at now. Holding, consolidating, but it's this H pattern in the weekly chart that says don't break underneath the low, especially 39.52 is the 200-period moving average support, but it closed below 39.39. It's a real problem. Now let's go to the other things that I was asked about. You go to GCZ 113. What is GCZ? Oops, someone beat me to it. GCZ is the gold contract up $8.30. Now, this is going to be very interesting because my weekly chart, the weekly chart says that there is internal strength, not yet enough to signal that there's going to be a rally to the 1467 level, which is the 200-period moving average. So let me do this. We had Dave on the phone. Maybe I didn't see him, but it says Dave from Boston. Now he's not on the phone, but he wanted to look at the GDX. Now, there's a big difference. Look at the chart right now if you're looking at Tiger TV. Now look at this. The chart difference, let me just go back again. In fact, I'm going to go to the continuous contract of gold just for the moment because it gives me the monthly. Do you see the monthly chart? You see the 9-period exponential moving average over there? So gold, the gold continuous contract and gold itself has had a slightly better, look here it comes, slightly better monthly action than the GDX. And the GDX is the market vectors gold minus ETF. Now, in looking at markets at this particular point, you've got to distinguish within a sector what stocks are working well, what stocks that are leading stocks within the sector. And what do I mean by that? Let me just run this quickly because this is all part of the demonstration. If you look at my Dow Quartet, if you look at GE, which is, oops, not DE, GE, GE, which is trying desperately to break this pattern right here, that falling axe pattern going into the Chapman wave inside track resistance. If GE is able to break above 24.20, it's going to be a leg B. But look how strong this leg A is. Look at the stochastic at 82%. So I want to do the relationship just to show you, just real quickly, as we go into the break. Look at these charts. You'll see there's GE, there's IBM, there's Triple M, and there's UTX. Oh, but I missed that. And I'll talk about that when we get...
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, listen, real quickly, we've got a caller online. I just want to finish up quickly with the GDX. The GDX, I'd hold off just a tad. I want to see if this declining wedge pattern sees support. Now, I am long, my subscribers are long in the equivalent of the GLD. And so far, the stop is held, and I do not want to take a loss on that. Just a little profit is fine, but I'm prepared to get out of it. That level's hit. But in this case, I would say that 24.58 is the level to watch tomorrow. And let's look at it again tomorrow, Dave. If you have a chance, call me tomorrow, because tomorrow's the day that I probably will start to see exactly. I want you to get the relationship of some of the best gold stocks that I look at. ASA, RGLD, it's a couple of others, and put it together with the Dow Quartet that I have. And I'm going to explain to you what I'd be looking at, which stocks might lead. So let's come back to that tomorrow. In the meantime, that's the level I'd be looking at this particular point to see if it holds on the GDX. Let's go to Chris in San Antonio. Hi, Chris. How are you?
Doing good, Basil. Hey, I was just wondering, if the Dow ever does make a peak B, where do you think it would pull back to be a good entry point?
So if the Dow, you're talking about on the daily chart?
I'm actually looking at the DIA. Yeah.
Okay. I would be doing this, and it's exactly what I'll be doing. The weekly chart on the Dow Diamonds is going to be absolutely critical, because if it takes out 156.24, the all-time high, I'm going to have to study that to say, is this a brand new leg C in the weekly chart? Is it perhaps a leg D if I use an instant restart? What I would say to you is this. There are so many signs that I'm looking at right now saying that this particular rally is starting to become very selective, and I will know by today's close and by tomorrow's close which stocks are beginning to participate, which are leading, which are starting to fail. Therefore, I'm looking at a potential cup and a mini breakout, depending, my pattern that I call the Chapman wave cup and ladle pattern. That's the one that spirals right through, in this case, 156.24. If it does that in leg B or leg C, it says you must not do anything until you get to a D. Why? Because it is very powerful with the stochastic at 96%. So I'm going to recommend have patience, wait this out a little bit. If there is going to be a peak, I think it's going to correspond to a number of different technical tools that I use. And one of them, you can see that the volatility index today is giving hints to say it's having trouble getting pushed down further. It doesn't mean to say it won't get pushed down, because I think it will if the Dow goes higher. But what it is saying is I'm going to be looking at that gap of 1309, the high of the 14th of August at 1309. If it starts to hold and I'm getting close to a D or even an E in the Dow, I will be looking to say, okay, now's the time to go back to the short level. That's number one. Number two is to be impatient at this particular point where we've got new. Look, I wonder if I can find it real quickly here. Probably won't find it. But while I'm talking to you, let me see if I can find this. This is the one. Oh, yeah, it says, I got a cartoon in my CD introducing the Chapman wave methodology that I drew years ago. And it has this guy standing in the water, and he says, I'm sure the tide is going out. The next thing is splash, and this guy's dunked into the water. You can barely see him, and he's struggling. And then he's lying on the sand, puffing, and he says, never short the ocean. And that's, we've got a tide going on right now, and you can see the speed with which we've come back, especially in the weekly chart. So I don't want to be in the wrong side of this particular position. So have patience. Let's look at it together. If there is a peak tomorrow with a lower high and then a new recovery high, give me a call later in the week. We'll look at this together and we'll go through it. So have patience, Chris. You will get there, but not just yet. Thanks for calling. Stay tuned for Larry Pesavento. Great show coming up.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.